palladium project at that stage in the world that is open pit. And we can be into production 20 months after we turn over the first dirt.
Generation Mining Limited is a client and sponsor of PinnacleDigest.com. Please read the full disclosure at the end of this video.
Palladium is one of the best performing metals in recent history. It has more than doubled in roughly the last 3 years. To start 2018, it traded for around $1,100 an ounce. And today, the metal is flirting with $2,500 because of supply concerns and strong demand. These factors continue to support Generation Mining, a Canadian company that holds an 80% interest in the largest undeveloped platinum group metal mineral resource in North America. We first introduced Generation Mining in November of 2019 after visiting its Marathon Palladium and Copper project in Marathon, Ontario. Back then, the company's share price was range-bound, around 25 cents Canadian, and it was relatively thinly traded. However, as the palladium price soared and Generation Mining delivered on key milestones, the company's share price steadily rose. Today it trades for around 90 cents Canadian. Now, having recently completed a feasibility study for its flagship asset, the path forward for Generation Mining may be about to come into focus. Today I'll be meeting with the company to dig into the results of this study and to learn more about what might be next for Generation Mining. Drew, thanks for joining us. I think a lot of people are excited to hear your thoughts on the recently released feasibility study for Generation Mining's Palladium and Copper project. Can you just take us through some of the most significant highlights as it relates to the economics of the project?
This is a pretty exceptional project. So some of the key numbers we're looking at are NPV, which really represents how much the property is worth. And then IRR, which really sort of shows how robust the project is. And on both of those numbers, the NPV is just over $1 billion at 1.07 billion, and the IRR is 29.7%. So pretty exceptional. And really one of the things we wanted to also deliver was a quick payback period, which we have 2.3 year payback. So what do all these numbers mean? It means it's a pretty strong project, and it's certainly worth taking it to the next stage, which is engineering and on to construction.
So you said 2.3 years. How do you get to that?
So the payback period of 2.3 years is really the time frame by which the company will pay back the initial capital, so the initial cost to build the project. And that's a very short time frame. So why that's important is that really represents us de-risking the project by having a $665 million capital, and then being able to pay that back in a short time frame of 2.3 years is pretty exceptional. You don't often see projects that have that sort of return.
Now, Drew, with respect to prices, if your study took into account spot prices of today, I understand the NPV and the IRR would be significantly higher. Can you expand on that potential?
So for the study, we chose more conservative estimates for those long-term metal prices. So we base that both on consensus pricing, what the people believe the future value of the minerals are going to be, but also we compared that to what the 3-year trailing average of the metal prices were. So in terms of the financial metrics, what we see at the spot prices, the NPV is double what it is at the base case. So it's about a little over $2 billion, and the IRR is 47%.
Can you touch on the potential mine life of the project?
Yeah, so the mine life we've designed is about 13 years, and it's pretty interesting because we've got a pretty exceptional exploration package on site, and we know there's other deposits. We have more resources, so a resource is really what you have the potential to mine. So we recognize that what we've modeled in the feasibility is a fraction of the potential of this entire property.
Thanks for joining us, Drew. It's been a pleasure. Jamie, it's great to be with you again. You've hit some key milestones since we last spoke. What are you most happy about? What are you most proud of when it comes to it?
What I'm most proud about of the feasibility study is obviously the results, the positive economics of that study. But secondly, what I think we're very proud about at Generation Mining is the time that we did the feasibility. It only took us 11 months from starting the feasibility to the press release of the feasibility, which was early March.
What's your current market cap today, middle of March 2021, fully diluted?
Our basic market cap is around $140 million, trading at $1 a share. with all the warrants and options, we're closer to about $170 million Canadian market cap.
Since we were in Marathon together in November of 2019, Generation Mining has increased its ownership in the Marathon Palladium and Copper project from 51 to 80%. What did you guys do to accomplish that?
And we needed to spend $10 million on the project over the 4 years to get to that ownership. As of November 2020, we had spent $10 million on that project. So we, as Generation Mining, now own 80% of the Marathon Palladium Copper project.
How's the company looking from a cash position? What's in the treasury currently?
As of the end of February 2021, we had $11 million in the bank. We do have some warrants that are in the money, which could bring up our cash to well over $20 million if those were exercised.
You guys note that Sibanye has certain buy-in rights that allow it to increase its interest in the Marathon Palladium and Copper project. Can you talk about how that would work and what conditions it's subject to should a positive production decision be made?
After Generation Mining makes a positive production decision, Sibanye has a 90-day one-time right to increase its ownership from 20% to 51%. So they could reacquire 31% of the project by spending the first 31% of the capital expenditures, which were from the feasibility study. So the feasibility study had a capital expenditures of $665 million Canadian. Sibanye would have to write the first check of 31% of that, which would be $205 million into the joint venture. After that, Sibanye would pay 51% and Generation would pay the remaining 49%. So in essence, Sibanye pays 66% of the capex and Generation Mining pays 34% if Sibanye was to back in.
You guys have proven that you're very capable of advancing an exploration project to this point. Taking it into production is an entirely different beast. Is that something that your team is ready and prepared to do? What would you see being a successful outcome, moving forward from this point?
What differentiates us from, I think, a lot of other junior mining companies is we have some management, as in Drew Anwyll, our Chief Operating Officer, who has been on mines before. He's developed mine, he's been an operator of mines. He could build the team that could build this project. We do have a strong independent board with Cash O'Meager, Jen Wagner, Paul Murphy, Phil Walford, and Steve Reeford, who most of them have been involved in mining operations around the world, and so we're very happy to have them around with us. We don't see any issue with us being the operators of a mining operation going forward.
Lastly, as Generation Mining continues to develop the Marathon Palladium and Copper project, what should investors focus on?
So I think investors should just focus on where we're at relative to our peer group as a valuation, as a discount to our net present value. They should look at the green metals that we will be producing, from copper to palladium to platinum. Look around at the Canadian economy, that this mine was going to create lots of jobs. It's going to add lots of tax revenue to the Canadian economy. So this is a project that Canada needs. This is a project that the communities around Marathon need.
Kerry, it's great to be with you again.
Yeah.
So the feasibility study, the results are in, they're public. What are you most proud of when it comes to the numbers?
A few things. One is that how fast we did it. We did this in 11 months, this feasibility study. It's only been 19 months since we acquired the project. Second thing is how well the numbers came in. The thing is a very robust economics. It's larger now than it was in the previous studies.
What do you say to the market and some investors who might doubt if Generation's Palladium and Copper project can become a producing asset?
It's first of all got a 1.5 year payback at today's prices. You don't see that in mining. The only other palladium project in the world at the feasibility stage has an 8-year payback. Second of all, we're right in Ontario on the Trans-Canada Highway. There's no barriers. Ontario's pro-mining. The mine is environmentally benign. We've got the town on side. There's no real reason why this can't be built.
We've seen a ton of volatility in metal prices in recent years. When you look out, 5, 10, 20 years, the macro trends that are affecting palladium and copper, what do you see?
Well, let's talk about palladium first. Palladium is a really unique element because it is essentially legislated in every country in the world to be contained in every car. You can't sell a car without it, and therefore a gasoline car. So therefore, it's going to be around as long as gasoline cars are around. And we are slowly switching to electric, but that transition is going to take a couple of decades.
So there's major demand fundamentals driving that. What about copper?
Well, copper is totally different. Copper is the green metal for the electric cars, along with nickel. You need 180 pounds of copper in an electric automobile. And the other thing that's happening in the copper market is grades are going down, production is going down worldwide, and consumption is going up. So if there is a transition to electric cars sooner rather than later, copper is going to be going through the roof because there's just not enough of it in the world.
Kerry, as you've mentioned, you've been in this business for decades. You've seen many projects rise and fall. What is it about the Marathon Palladium and Copper project that makes you believe it's going to go the distance?
Right from the first time I saw it, it was unique because, first of all, right now, currently with our feasibility, it's the only palladium project at that stage in the world that is open pit. And why that's significant? Because the underground mines are going to take many, many years before they can get into production. We can be into production 20 months after we turn over the first dirt.
Thanks for joining us, Kerry. We wish you guys nothing but luck.
Hey, thanks.
Generation Mining's focus is on advancing the Marathon Palladium and Copper project, with a feasibility study complete for its flagship project, showing a net present value of just over $1 billion and an after-tax IRR of 30%. Generation is at a stage that many other non-producing juniors won't reach. Although much needs to be done before a production decision can be made, from our perspective, Generation Mining finds itself in a relatively strong position to potentially capitalize on the demand fundamentals facing palladium, copper, and other platinum group metals. Like this video and subscribe to never miss another adventure.